Hi, my name is Adam Whitmer. I'm the founder and host here at ComplianceCohort.com. This compliance clip is going to talk about the TRID total of payments disclosure. So this is a TRID and lending topic. Now, the question we have here is, what is the total of payments disclosure on the closing disclosure? So this would be a good topic for you as a lender. Maybe you're a lender, maybe you're somebody who's responsible for the loan department. And if I was a lender and I'm going through the closing disclosure, talking to customers, explaining the different disclosures, sometimes it's good to have a deep dive of a various area. And so that's what I wanted to do in this compliance clip, is answer and go into a deep dive as to what is the total of payments disclosure on the closing disclosure, and kind of give you a deeper understanding. Of course, it feels like that the answer is going to be it's the total of payments, which is the short answer, but the commentary, and actually there is a frequently asked question that addresses this, are a little bit complex. There's a little bit of complexities in this. So let's take a deep dive and look at what the total of payments disclosure is on the closing disclosure. And we'll start by looking at Regulation Z, and the actual citation is in 1026-3801. And this really tells us what has to be on the closing disclosure. So under 1036-3801, it tells us that we must include on our closing disclosure the total of payments using that term and expressed as a dollar amount, and a statement that the disclosure is the total the consumer will have paid after making all payments of principal, interest, mortgage insurance, and loan costs as scheduled. So it's pretty straightforward. The closing disclosure gives us some guidance as to what is included. Now, the commentary says it a little bit different way. It says the total of payments is the total expressed as a dollar amount that the consumer will have paid after making all payments of principal, interest, mortgage insurance, and loan costs as scheduled through the end of the loan term. So it's everything you pay during the loan. But it's not everything, because there's some different things that come into play when we look at the commentary and the frequently asked questions. And we're actually going to define all of these different pieces. It's not too complex, but let's take a look and see what the frequently asked question says. So there are some frequently asked questions that explain this. And frequently asked question number 1 says this. It says the total of payments does not include payments of principal, interest, mortgage insurance, or loan costs. This is the key part here, that the seller or other party pay. So it does include those things that the consumer pays, but it does not include the things that a seller or other party pay. And the other party could be the creditor. And these are things that may offset in whole or in part the amount the consumer would pay, and things that are offset through a specific credit. For example, through a specific seller or lender credit, because these amounts are not paid by the consumer. So it makes sense. Now, it's a bit tricky here because the lender credits that are specific lender credits are not included in the total of payments. However, general credits that are generalized payments from the creditor, the seller, or other party to the consumer that do not pay for a particular fee do not offset amounts for purposes of the total of payments calculation. So lender credits that are specific credits don't count, or do count. They are taken away, but general credits are not going to be taken away. So that is a little bit of a quirk, and that's why we're taking a look at this and doing a bit of a deep dive. Now, the frequently asked question explains a few other things. It kind of defines some things for us. It's not rocket science here. Nothing should be new. But it says in calculating the total of payments, payments of principal are defined as the total the consumer will pay towards the principal on the loan through the end of the loan term. Payments of interest are the total the consumer pay towards interest on the loan through the end of the loan term, and includes prepaid interest. So prepaid interest must go into this calculation. Also, payments of mortgage insurance are the total the consumer will pay towards mortgage insurance or any functional equivalent. So not just mortgage insurance, but functional equivalents, and includes amounts for prepaid or escrowed mortgage insurance. And this would be things like similar coverage for mortgage insurance from the Department of Veteran Affairs. So the VA has their own fee, or the Department of Agriculture, those guarantees. under USDA loans. So there's a number of different things that are an equivalent to mortgage insurance, and those are included in this calculation for mortgage insurance. Now, payments of loan costs are the total the consumer will pay towards the cost disclosed on the loan cost table and designated as borrower paid, not seller paid or lender paid, but borrower paid on the closing disclosure under the closing cost details. So that's some further explanation there. One final thing on the total of payments. They do consider the accuracy. You have to get this accurate. And under the regulation itself, this actually comes right out of the regulation in Regulation Z. It says, the disclosed finance charge and other disclosures affected by the disclosed finance charge, including the amount financed and the annual percentage rate, shall be treated as accurate, meaning that it's okay and you don't have to correct it. It's accurate if the amount disclosed as the finance charge is either, number one, understated by no more than $100. So if it's understated by $150, you have a problem. And the commentary actually gives an example where it's understated by $150 and it is not accurate. So if it's understated by no more than $100, that's okay. Or if you overstate it. So if it's greater than the amount required to be disclosed, you're okay. So overstating and being conservative is okay when it comes to the total of payments in regards to accuracy. So that's total of payments in a nutshell. This is a compliance clip. These are free videos that we have available on our website at www.compliancecohort.com. We have a free membership. It's called our basic membership, and that's where you access these free videos. We have a bunch of videos just like this. Our basic membership is free, includes videos like this, includes articles, a weekly newsletter, a bunch of resources. We do giveaways, a bunch of tips and other things. So take a look at that if you're not currently a member. If you are an existing member, you know we have premium training available in our store, compliancecohort.com/store. That's it for this compliance clip. Until next time, I hope you have a compliance-filled day. Thanks so much.